Good evening, folks. Welcome back. I hope everybody's doing well. We're going to be doing a quick little review on Friday's price action. All right, so here for ES, this is our daily chart. We won't be looking at NASDAQ today, so I mentioned that we were inside this trading range here. Until we get out of this range, you have to be a scalper. Okay, so I mentioned that this area here also, this is a volume imbalance. That would be a likely draw up into and above this short-term high, and we got that like gangbusters on Friday. This low at 38.22.5, and then this low right here at 38.14.5. Those two levels I was watching as a potential break, and then I targeted 38.14. I felt like we had a really good chance of doing that. The low came in at 38.19 even. On the micro E-mini, you can look that up as MESH2023. It actually went below the 14. So take a look at that and you'll see an SMT divergence. And that means the MESH2023 went lower than the ESH2023 symbol. Okay, so just something out there for you to study. On the upside there, this was the draw I mentioned earlier in the week, and you can find that on the YouTube channel in the videos. Whenever I make a notation of a level, especially if it's a daily chart, that is something you want to have on your chart at all times, and it needs to be visible on all time frames. And I'll tell you what that means when we get into the lower time frame charts. But for right now, this is what you should have noted on your chart. So when we see on the lower time frame chart, this orange level here, this rectangle, that's what this is. Okay, it's rooted to this candle's close on December 15, 2022, and this candle's open on December 16th, 2022. Okay, so we're going to drop down into an hourly. All right, here's the hourly chart, and you can see this is the relative equal lows I was looking for as a potential drop down below that. So I was looking for that 38.14 based on these old lows. Okay, so in the event that NonFarm Payroll wicked down below that, that would have been what I was anticipating. And then if it would have done that, I would have been looking for something to draw back up into the very minimum right here. And then if it was to accelerate, obviously, you know, going back a little bit further, looking up into here. And this target was mentioned as upside earlier in the week. On a non-farm payroll, you know, I'm not going to hold something to that level, even for a demo trade. Okay, so just keep that in mind when we go through our example here. So we had nice sell side liquidity resting below these relative equal lows. Sell side is sell stops. Anyone that's long or wants to sell short, or is trying to make money going down if the market goes lower, if it goes below that and rejects that, that is a stop raid. And then we would look for the opposing buy side, which would be here, here, and above here. And then if it's really going to have an extrapolation to the upside, that orange box is that daily volume imbalance I mentioned early in the week, last week. All right, so we're going to drop down into a 15-minute time frame, and I want you to take a look at this candle right here. Okay, that's Friday. So go to this candle right here. That is the midnight candle in New York local time, right there. And we're going to drop a level right there. So 38.47.5, we'll make that purple. That right there is our filter for power 3. Now, what does that mean? Well, for power 3, if we're thinking that it's going to go down, you would ideally want to see a move above it and then go back below it and then create some kind of selling opportunity and then reach down into that 38.14. But we got real close to 38.14. Well, 19 is, in my opinion, close. It's only like 5 handles away. So if we see this run up here on non-farm payroll at 8:30, and we're not trading on non-farm payroll. So at 8:30, we had a run above that level. And I noted it on Twitter real time. I said, take your attention to 38.14 because it could easily just spike down there. Now, had it done 84.14, and if it expanded beyond that, I had 38.04 also noted as a potential level. So in the event, because I don't know what they're going to do with the employment number. This is the reason why I don't trade this non-farm payroll event. But we failed to go back below this low here. And when we go into lower time frames, it'll make more sense. But let's drop to a 5 minute now. Okay, so we have an imbalance here in the form of a buy side imbalance, sell side inefficiency. That means buy side was offered. It's inefficient in what? Sell side. So in other words, it needs to have some movement between this candle's high and that candle's low. So your focus should be right in here. This range okay, right in here, this candle's high and this candle's low. There's only one candle between those two candles. It's this one here. And it's one big, beefy, caffeinated candle. Your eye should be gravitating to these types of movements. This is a buy side imbalance, sell side inefficiency. Its category for a PD array is fair value gap. You can see how we went down into that area here, dipped into it, and then turned around and attacked these relative equal highs. Now, before I drop down into the 1 minute chart, I wanted to kind of like take you through this thought process. Right about in here, I tweeted and said, note 38.14, because we could have easily spiked back down through here, cleaned this area up, ran the stops on anyone that was long with stop losses below that old 15-minute low. Let me bring it back here so you can see. So here's old lows here, and there's one more segment of price action right there. That's where those sell stops I was referring to all week. So if it was able to do that, that's fine. Then I would have been looking for a run to take these out, but it didn't give me that. As it's dropping down, pay attention to 38.14. But then we get into this area here, which I was watching, but I want to see proof. Okay, I don't want to just go in there and co-sign something on Twitter and not have any idea what it is I'm looking for. I want to see proof as to what it would likely do. If it's not going to go to 38.14, that's fine. There's no trade there. I'm not selling short. I want to see if it can get to 38.14. But if it cannot and it rejects this buy side imbalance, sell side inefficiency, what does that mean to reject? Well, it's not getting through it. So in other words, in the easiest language I could provide for you in regards to that, the lowest portion of that range between this candle's low and this candle's high, anytime you have a big one single candle and it's separated with the candle's high before it here and a candle after its low here, and it's just that range that's shaded in blue, there's only one pass, one candle, okay? That is significant when price is coming back down into it. But when there's high impact news drivers like, well, non-farm payroll or FOMC, it can overshoot these areas. But this purple level here, look what's happening. The market drops back down. I gave it the likelihood of maybe it ran up in here to get above the opening price, and then does it break below this area here and then tag the 38.14 level. Now, if it would have went below 38.14, came up into a fair value gap, I would have looked for a run to 38.04. And you can find that 38.04 level on your daily chart. It's an old daily low. Anyway, because we failed and rejected to go below this level here, you're going to have to drop down to a 1 minute chart, which we'll do now. All right, so here's that same buy side imbalance, sell side inefficiency. It's been refined to show on just the 1 minute chart. So we have that drop down in here. then we rallied. But what I was trying to get your attention to was here, okay? This little area right there. If that can stay open, and this is what I was going to get at, this area here, if that stays open, in other words, it doesn't trade back down into it. Let me highlight it here. All right, so if that area there stays open, in other words, the price doesn't go down into it, and a short-term high is taken out. Here's a short-term high right there. Okay, so this stayed open, and this short-term high was taken out to the upside. There's a small little gap right in here. Notice where all of this is occurring. See this dotted line here? I'm watching to see if this level stays open and if we get above this short-term high right there. Because if we do, then it's likely to do what? Run to take out these relative equal highs. So when the market does in fact trade above the short-term high here, any retracements down into this area here, what area? This candle here, from the high to the opening, right at that dotted line. What is that dotted line again? That's the midnight opening price in New York time on Friday. So power 3 is what? We're now thinking it's going to go to here. As it drops back down into this candle's high to open, I'm getting real close to that midnight opening price on Friday. So that means I'm doing what? I'm going to try to buy at or just below the opening price at midnight, because my expectation is, and this is what I teach my students, if this is what the range is likely to do on the daily chart, in other words, this hypothetical candlestick, okay, let's say this hypothetical candlestick represents the daily chart. Okay, and I use obviously green. So let's use this here. Okay, so we have this scenario here where we're expecting the opening price. Now, again, think about this candle on the daily time frame. Right now we're looking at a 1-minute chart, so don't be confused by this, okay? I'm just showing you the logic. The opening price would be this price right here. The opening price at midnight, New York local time. That is your daily opening price. I don't care what TradingView's opening price is when you put it on the daily chart and like look at the daily candle's opening price. That's not accurate. Okay, that's hours and hours away from what it is that the algorithm is going to refer to. You want to have New York at midnight, that opening price. Just pull up a 15-minute time frame and you'll have it. So you want to have that price noted. That's what I have here. Remember, we walked from the 15-minute chart and extended it out in time. If we're bullish, by having this level on your chart, you want to be buying at that level or beneath it. In worst case scenario, you want to be buying near it. So your thought process would be like this. On the daily chart, I'm expecting the accumulation phase on the daily range to occur below a specific level. And you'll see how you're in the 90% club. Okay, if you do these types of things and your draw on liquidity, what is that? Well, let's just say that this level up here was the 38.95 and a quarter level. Don't be discouraged or distracted by the actual price over here. But let's just say that was your draw on liquidity. Okay, but let's just say that was your draw on liquidity for buy side based on the weekly chart, based on what you expected in terms of higher time frame analysis. But you would be trying to buy below the midnight opening price on any day. Don't think this is just a non-farm payroll event. You're trying to buy at the opening price or below on the daily candle when you're bullish. And if you get above the opening price, like you see it doing here and here, as it goes back close to that opening price, you can be a buyer there too, if there's logic behind it. And the logic I used was these two down close candles is a bullish order block. It's also a swing high. We went through it here. So this is what I teach you to look for what? A shift in market structure, meaning the market has tipped its hand to you that it wants to go higher. So if it's going to go higher, where's it going to go to? Well, you have an imbalance right here, right? Yeah, that's fine. You have a bearish breaker here. That's fine too. But look closely. You're going to see these levels here are way too smooth. It looks too perfect. It looks too much like classic support and resistance. And here's a note that you want to have in your study journal. And anytime you see levels in your chart that are like this, or they're just too perfect and smooth, I always say this, okay, but smooth edges like to be made jagged. That means when it's smooth like this, the market will rip into that and make it jagged. It doesn't like to have smooth highs and smooth lows. It will always find a way to go back into those levels. It may not happen right away, may not happen the same trading day, but it will always look to go into those levels again. That's what the algorithm does. So let's go back to our analogy. Let's assume that this level here is this level right there on the daily chart. So that level, for whatever reason, we think there's something up here that is going to be a draw on price. Okay, liquidity up there is making the highest probability that the market will want to gravitate to that level. And that just happens to be on our daily chart. That's the level you would have. Well, while you're watching price, when it's down here like this, meandering around like it was doing here, I'm not paying attention to all of this. This is all based on the reaction to 8:30 in the morning at non-farm payroll. So I'm not worried about this price action. I look at this and ignore it. I want to see where the real range is. It's here. Then they did this fake run. Okay, it looks like it's going to break this, but it doesn't, and tears off, goes lower into our buy side imbalance, sell side inefficiency. Then we wait. Does it break lower? I'm not chasing it. I'm just observing it. I'm watching. I told you, note 3814. See if it can get down there. It didn't want to do it. Then it rallies away, leaves this area in here. That's what I was looking for, and I was watching. Obviously, you knew I'm looking at a 1 minute chart. I was commenting over a 1 minute chart. But I wanted you to have that on your chart. I told you to have a line on this level and this level. Reason why, because I was going to come back and talk about this level today. But the market wasn't able to get down to that. And then with this short-term high, it breaks above it. So there's a shift in market structure there. So I'm looking at all of this area here below the opening price. And now this level is this. Conceptually, in my mind, this is what I'm seeing the algorithm refer to. I don't care about this. I don't care about every candle prior to that. See, when you're looking at price action, you're getting caught up in all of this noise. My focus, my absolute focus, is only here. Right there. Inside that box, that's what I'm focusing on. That's the initial framework that the algorithm is going to work within. Why? Because that's the dealing range. This is where we are. This is where we made the high for the day. We've left liquidity in place in the form of buy side. We've broke down back into a discount. We have not went lower. We created a short-term high. This range was not closed in or even retreated to. Then we had a short-term high broke there with this candle movement higher. So in my mind, I'm thinking this level here, this line represents this here. So I'm looking at the daily range like this. Even though, okay, that we have traded up here and we've already essentially been here, I don't care. I'm thinking about it just like the algorithm will, if we want to personify the algorithm. So when it's coded to refer to an old dealing range, that's what this is here, this high to low, I believe it's going to do what? Expand outside of that range in the form of external range liquidity. It's going to go outside the boundaries created by this high and that low in the form of a up move. But this little segment of price action, that's the focus. That's the setup. That's the only thing that you would need to be concerned about at the moment. You don't worry about the hourly chart. You don't worry about the 4-hour chart. You're not worried about the daily chart. You're not worried about the weekly chart. You're not worried about the 15, the 10-minute, the 7-minute, the 3-minute, the 2-minute. This is it. This is the framework right here. The fact that it shifted above this short-term high right there sets the stage for a run above here. Okay, and I don't know, and you didn't know that it was going to go up to 38.96 in a quarter, but once it got above this level here, I took 10 contracts off of a 12 contract position, and I left 2 contracts on. By having that run above that 38.76 and a quarter level, I drew your attention on Twitter to 38.95 for buy side. And then I had a limit order at 38.96 and a quarter. And it reached up in there and did its business. I also had 38.85 noted as an old daily high as well. And you can find that level on your daily chart. So back to this example. If it's inside this, let me go back here. If I'm just looking at this shaded area here, let me do this. So inside that, and that's not a nice color. I'm looking at this shaded area in here. And I believe it's likely to go from here, if it takes out this high, from here up to here. So I'm envisioning the daily candle looking like this right now. Even though we've already been here and came down, right now the algorithm is thinking, okay, we're real close to the opening price at midnight, which is right there. We ran above it, so it did this. It went up a little bit, and now we're back down inside the middle of the range that would be represented by this low to this high. And then when it drops back down, it's getting real close to that opening price again. So it's doing something like this. Okay, and I'm anticipating that the daily range will now expand up into this level here where buy side would be, which is represented by this high here. That's why this red line is being annotated on the chart. So I'm expecting price to keep gravitating higher, and that would be something like here, and then continuously gravitating towards that high like it's doing here. I'm not getting tricked into thinking it's going to go down. This level is way too clean. Clean being it's smooth. It's like relatively equal highs. The market's not going to leave that. And I actually tweet also. I said, I do believe we're going to go to 38.76.25 because it's so close. It would be criminal to leave it intact. Okay, so all this time it's dropping down. I'm not worried about it not going up there. So it gives you the confidence to stay with the idea. And then finally, when it runs above it, like that, this is what the daily candle looks like. And I'm going to watch and see, does it keep digging into my next objective, which would be an old high at 38.85. So with 38.85, which being an old daily high, there's buy side above that. Why do I know that? It's just the way it is. Large funds like to use previous day's highs and lows. So that liquidity is real. As you can see, the market does in fact trade up to there as well. And I took a partial there. And then it left one contract on for 38.96 and a quarter. That level being the next draw, and you'll see a tweet. And the whole time it's doing this expansion up, higher, higher, higher. And we're not thinking, oh, it's going to collapse in reverse, because the candle, if it's going to have a big move like this, it's probably going to close near or at its daily high. Now think about that. Because if you can do this, you can hold on to the last hour of trading, which would be 3 o'clock. And then something happens at 3 o'clock I've already taught you, or I've introduced to you, where the market can come back into its range. And I want you to see it like this. Okay, so we can see that it goes up into that daily volume imbalance. Remember that orange rectangle I drew on the daily chart time frame? It goes right up into it. Look at the bodies of the candles respecting the top end of that. Then it drops back down into the low end of it, bounces around, hangs in there, and then leaves it. You see that? And here is 3 o'clock, right there. So if your target happened to be this daily volume imbalance, that could look like something like this. So in your mind's eye, and tracking what the daily range would look like on a daily chart, I mean, you would obviously have a daily chart referred to throughout the day. That gives you the confidence to stay with the trade, because I get a lot of questions all the time. How do I stay in these trades? How do I not get shaken out of them? Because I'm thinking like this, because this is my concept of power 3. Power 3 is accumulation, manipulation, distribution. So accumulation, smart money's doing longs at that time. I didn't know for certain. I have to wait for 8:30 to come in, do the manipulation, and then it will tip its hand. And I just walked you through that based on that short-term high being broken and the inefficiency for the market to fill in that buy side and balance, sell side inefficiency. So 38.14 was no longer a factor. So in my mind, I'm thinking this is the daily candle. I'm not being swayed by all the little minor fluctuations on these 1-minute candles, which is what makes everybody think that it's noise. It's not noise. It's the same price that the candle's using to make the daily chart candlestick. This is a matter of knowing the rules of engagement and knowing that, okay, once we get to the last hour, 3 o'clock, if it gets to a target like that, be done. Be content with that, because it's likely to do what? It's likely to pull back into the range and create a little bit of a wick at the top end of the candle. So inside this little area now, this little retracement, and it closes off the high. So if this is the high, let me get this box out here because it's going to keep flittering. Flittering, is that even a real word? I just made it, so let's go with it. The high here, we're going to say is that. And it might pull off and then close trading for the day right there, that closing price. So we see it over here. Here's the high, short-term low. It breaks, comes back up into a volume imbalance. Where's it going to tag? Sell side right below here. Boom. Where's it close? Off the high there. So it looks like this for the daily candle. Okay? Or very close to it, because it's not the best in terms of scale. It won't look exactly like that. But conceptually, it's obviously the best I can do artistically. Okay? And for the purposes of looking at the daily chart, let's look at the daily candle now. And there it is. Okay. All right, so here's the 1-minute chart. And this is the best I could come up with conceptually going through the individual fluctuations in this chart, with the exception of the actual tweets you see here. You can see the times. Okay. And don't take this for what it is being shown here. These are actual links to the tweets. Okay. And if I click on this right here, it'll take me to the direct link here. If I click on this one, it would take me to this tweet here. If I clicked on this one, it would take me to that one. Just go back and look at Friday, January 6, 2023, at these respective times, New York local time, okay? And you will see that these tweets are, in fact, right there, 38.76 buy stops. What is that? That's right here. But here's the buy side and balance, sell side efficiency. And over here, let's scrub back here for a moment. Here's a high with a low prior to it and a lower low. So that's a bullish breaker. But this short-term high here, I was looking at this short-term high being broken right on this candle here, the same way I'm telling you this one, when it came through it there, that's a dead ringer. It's going right here. Okay, buy stops in the crosshairs, right there. As that candle's dropping down, bang, right into the order block. This short-term high is a shift in market structure. Now I have two shifts in market structure. This short-term high here, and this gap stayed open. Then we have a shift in market structure above this high with this candle right there. And we have this fair value gap left open. When this thing starts to run higher, I'm confident that I'm on side. What do I mean by that? I'll show you in a second. Just settle down. Then we have a order block here with this drop down. The market accumulates around it. That's what this little trend line is here on the opening price. And we have a fair value gap. So it bullish order block, trades to it again. It's a retrade. Then it leaves it, then comes back down, and it becomes what? A reclaimed order block there. Okay. So this is not institutional order flow entry drill. Institutional order flow entry drill is when you have an open range in the form of a fair value gap, and it drops down one tick below the framework of the high, like it does here. Look at this candle's low. You're looking at that price right there. This candle's low is what? 38.77 and a half. This candle here trades down into what? 38.77 and a quarter. That's institutional order flow entry drill. That's mine. That's my name. Don't Google because you're not going to find anything about it. What's actually happening is it's high frequency trading. It's being entered there. Okay. There's nothing more I can teach you about it except for the fact that if I trust the fact that these ranges are not going to close in, I'm going to use that as another area to build a partial and build a pyramid position larger. In the event that I do it wrong, I can still be a buyer here and do a pyramid entry. I'm not saying I did it here, but I'm just saying that in other instances where you see me doing my recordings and I'm recording my management and stop placement and building another entry in to build the position bigger, sometimes I'm buying what I believe is an institutional order flow entry drill, and it goes down and closes in the fair value gap. I'm not intimidated by that. It's okay. It just gives me the opportunity to get in, and then if I have room or leverage still in my equity in my position, if it goes down to the lower end, I can buy again one more time. So whatever position I put here, I'll duplicate that here. So in other words, let's say it was dropping back down here, I could be a buyer of one contract. Say I may have 6 here, 3 here, 2 here, and then I'll do 1 here. But if it dropped down one more time, I'll do 1 more as the low end of that fair value gap. I won't do 2 or anything higher than that. I'll just do the same thing I did on the lowest new pyramid entry. And it won't be that big of a deal because I have all of the equity behind all these positions still in my favor, supporting it. So I don't look at it as adding to a losing position because I'm already stacked with all this equity from here to here and all up to here. And I've already taken a partial here and a partial here. So I'm not going to pyramid on a move like this, which is why you're going to ask, okay, well, when would you not want a pyramid? As you'll see, I took a partial here, the largest portion of it, and a partial here, and the last portion came off here.